Hello, this is Huskins, your Forex mentor. I'm going to be discussing how I went about trading the FOMC press conference, but let me give you a little overview of my reasoning for the trade. Now, the street is abuzz with information of QE3. Uh, to give you an analogy, QE3 is printing money, and I would equate the market to a child, and a child really wants candy. So the parent, which is Ben Bernanke in this case, gives candy to the child every time the child cries a lot, and then after its sugar intake, it's happy for some time till it starts crying again, and that's the kind of a cycle which we are in right now. We had QE1, QE2, and QE3. Now I'm trying to break this down in real simple formats. Please don't hold me accountable to QE1 and QE2 wasn't distributing candy to the market. I'm just trying to make things absolutely simple so that people can understand complications in the market with reference to something which they might actually know. So now coming back to a candy example, I the market was expecting the printing press to be switched on by Ben Bernanke, and in anticipation of that, the market steadily was rising over the last 6 weeks. I think we were at the highest high on the Dow Jones Industrial Average of the last 6 weeks, and based on that, I looked at a few fundamentals, and I saw when Ben Bernanke in the past has started the printing press. Now, one thing which I noticed was that Ben Bernanke starts information on the QE1 and basically printing money when the market tanks significant percentage. When the market does not do that, I felt it wouldn't be required for Ben Bernanke to start the printing press right now, because then he'll have less ammunition should something happen later. Right now he's keeping his ammunition with himself. So that's what the overview trade idea was, and now based on that trade idea, we created a trade plan. The trade plan was to enter 25% of the regular size. Why? Because it is pre-news trade. The market can, I can be absolutely wrong, and the market can just take off, and my predictions can be thrown out of the water. So I always like to go conservative in my approach, and I suggested that we trade 25% in anticipation of the dollar climb. That is, sell the GBP USD on any significant rise over the last few hours pre-news. Now uh, the statements are going to be out at 12:30, and the press conference is going to be out at 2:15. So a good time to start looking at the markets would be at perhaps start of New York time. So let's see what the markets were at the start of New York time. Now, when I say markets, I mean GBP USD, and why I have chosen GBP USD, I have mentioned in my trade plan. Let me not, repeat myself out there. So, you see that the GBP USD was making new highs at that time, and that sets up perfectly for us. Why does it set up perfectly for us? It's just telling me that the market is really expecting some candy from Ben Bernanke, and they're not going to get it. And if they're not going to get it, it's going to drop like a hot potato. So this is at 8 o'clock, and if you can see, it is the highest high it has been for some time. So it might be maybe decent idea to start shorting from 8 o'clock, but I do not like to play blind. I used my, moving average crossover. Now, why did I use a moving average crossover? It's just experience. I have no a real reason to say, okay, this is what you do, with this kind of a release. It's just out of experience that I did not know how much higher could the GBP USD go, but I knew that once it starts retracing, it's going to fall like a hot potato. Now, how would I know that it has started retracing? I used moving average, and so now let's see what happened. The markets, market almost from the 8 o'clock on the Q, it started, retracing. Now let me see whether it retraced enough. Once it retraces enough, then it means that I'd expect the market to drop like a hot potato. So our entry was from 1.5755 ish, based on the market retracing after a run up. Again, based on my trade plan out here, which said I'd be selling into the GBP USD pre-news. So now the market, we are short in the market from 1.5755, and I'd say we just have a stop of 100 pips just because we have to have a stop, and we see how far the market can take us, in case it drops. Now let's see what actually took place. The market slowly started going down. Now we're coming closer to the 12:30 statement. The statement is something, by which the Fed chairman or the Federal Reserve would announce if there is a quantitative easing program right away. And the conference would be a place where it would announce if it is thinking of something in the absolute near future. So that's the main difference, and you need to bear that in mind. And 12:30 is when the statements are out. So let's see what happens at 12:30. And it's 12:30, and you can see the market absolutely tanks like a hot potato, um, on the release of them not getting free money anymore, or not anymore, or more free money. So they're not going to get extra candy, which they were actually anticipating. And this would be about a 90 pip drop from, or even, yeah, a 100 pip drop from our uh, pre-release price, sorry, not pre-release price, from our entry price. So that this would be a decent place to actually, you know bank in some pips. Now that's trade number one. Trade number two is that now that the market has tanked based on the fact that they did not get QE3 in today's statement. Let's see whether the market starts anticipating, maybe, just maybe, Ben Bernanke is going to announce something in the very near future, and wait for its press conference. So now, again, the trade idea is to short any retracements or movements up of GBP USD before the news. So let us see what happens. And if you can see that the market went right up to this consolidation area. I'm going to remove this entry price, and the market went right into this consolidation area. So this would be a good place to perhaps short again from. Now we are about 1 hour away from the press conference, and it would be a decent place to go short again from. So we short again at 1.5737 area, and let's see what happens. At 2:15 we have Ben Bernanke announce. that basically he's keeping the cards to himself right now. He's not going to have a QE3 immediately, and the market starts going down. And this would have resulted in another maybe 30 40 pips. Now, both of these trades are on 25% of the lots. So when I say that I made 100 pips on the first lot, and 40 pips on the second lot, it just means that I have made 25% of that, not the full 100 pips, because we trading a lot less leverage. I hope you all enjoyed this video, and keep the likes coming. That really keeps me motivated and lets me know that you all enjoy such videos, and you'll like to see a lot more of them. Thank you.